we could be seeing $250 to $500 silver. Now, how long have I said triple-digit silver is inevitable, that this will happen? It's been a very, very long time. If gold stands still, silver could go to about 1,000. If it was to go to, I'm not saying that it's going to this ratio, but that's what it would require to get to that 3-to-1. About $1,000 an ounce silver. So I don't think it's going there, but his final conclusion here is, okay, cool. And mine is, which one are you going to buy?
Mike Maloney, best-selling author of Guide to Investing in Gold and Silver and founder of goldsilver.com, has long warned about the distortion in the gold-silver ratio, a key metric that most investors overlook. And according to Mike, that distortion is now reaching historic extremes. He points to a chart created during the COVID-19 crash, when the gold-silver ratio reached an absurd 124-to-1. Even today, it's hovering around 94-to-1. That means it takes 94 ounces of silver to equal the price of 1 ounce of gold, despite silver being mined at a 7-to-1 ratio globally and above-ground stockpiles suggesting a 3-to-1 availability. That's not just a deviation, it's a market anomaly waiting for reversion, and reversion is coming. Mike believes the cup-and-handle pattern on silver's long-term chart, which dates back to 1980, is signaling an explosive breakout. If gold holds or rises while silver plays catch-up to normalized ratios, triple-digit silver becomes inevitable. Analysts like Eric Sprott are even forecasting $250 to $500 silver, and Mike's models agree. The physical market is already under pressure. For 6 consecutive years, silver demand has consistently outstripped annual supply, resulting in deficits ranging from 286 million ounces to 1.3 billion ounces. Even 2025 is forecast to be short by 187 million ounces, and Mike says that number will likely be too conservative. Meanwhile, institutional giants are waking up. David Bateman recently acquired 1.5% of the global annual silver supply, describing precious metals as the only meaningful life raft as the financial system teeters. Massive treasury refinancing, designed obsolescence of fiat currency, and escalating global credit bubbles. These are not fringe concerns. These are systemic signals. As Mike reminds us, the game is musical chairs, and physical silver is a representation of a chair. Crypto? Maybe. Real estate, stocks, bonds? Likely to underperform. When this reversion hits, it won't be gradual, it'll be ballistic. Now we present the clips of Mike Maloney's latest video. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
The gold-silver ratio has been seriously out of whack for more than a century now. And there's going to be a reversion to the mean. If you stick around to the end of this video, you're going to see why this mean is going to revert. So this is an older chart that we made during the COVID crash, and the gold-silver ratio went up to about 124 ounces of silver to equal the value of an ounce of gold. Just absolutely insane. And it's been over 100 again just recently. Today we're at about 94. However, from where we're at today, I'm going to save that for later. What I was just going to say. You're going to find out near the end. So Eric Sprott believes that we could be seeing $250 to $500 silver. Now, how long have I said triple-digit silver is inevitable, that this will happen? It's been a very, very long time. So I don't know the range. But $100 silver, that cup and handle pattern that you saw is projecting more in alignment with what Eric Sprott is predicting here. And here's some of the drivers. So you take the total supply each year minus the total demand each year, and then this is the market balance less the exchange-traded products. So you've got, these are all in millions of ounces. 10 million ounces plus, these are plus figures, plus 10, plus 45, plus 35, minus 73.5, minus 286 million ounces, minus 144 million ounces, minus 132 million ounces, minus 163 million ounces, minus 210 million ounces, minus 187 million ounces is the forecast for 2025, and this is going to be seriously wrong when all is said and done. So there you go, 2016 through a forecast of 2025. But you look at the imbalance that we've had for the past 1, 2, 3, 4, 5, 6 years. We've been seriously out of balance. And so David Bateman says, here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of the annual global silver supply, 12.69 million ounces. The global monetary system is about to collapse. The biggest credit bubble in history will soon pop. There is no way the U.S. can refinance its $28 trillion in maturing treasuries in the next 4 years. $28 trillion in the next 4 years without an obscene amount of printing. The Trump tariffs are hastening the collapse, and it's by design. Gold and silver are the only meaningful life raft. Physical possession is everything. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are the precious metals. Crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. The banking system has been meticulously designed to seize your assets, to buoy up a collapsing banking sector. See the Great Taking, which I've made many videos on, by the way. You have zero counterparty risk with precious metals. This is not a drill. Your grandkids will someday either muse or lament about this financial decision you are faced with. You are now faced with. Don't fail them.
Mike Maloney's silver thesis isn't just based on emotion. It's rooted in math, history, and physical supply dynamics. From 2016 to 2025, the silver market has been in a near constant deficit. We're not talking small numbers here. Deficits of 100 to 280 million ounces per year. And that doesn't even count demand from exchange-traded products. Wall Street pros are watching, even if they don't say it out loud. Resistance levels and technical patterns, they matter. Mike points out that when silver breaks above its current resistance range, we could first see a run into the low $40s, followed by a pullback, and then a violent surge higher. That's classic slingshot price action. And don't forget, in 1980, silver reached $50 when supply-demand fundamentals were less extreme than they are today. This time, the setup is even more asymmetric. Mike also stresses that many 2011-era silver holders have exited, meaning selling pressure will be lower on the next breakout. This isn't about breaking even, it's about wealth transfer. Let's get back to the interview.
They look at this, and the professionals on Wall Street and stuff, they trade by a lot of these patterns, and resistance levels is one of the biggies. So what we should see here is, this only goes up through 2012. So you're not seeing what we just did. I mean, we broke these levels, and what you should see here is a fairly quick run up into the low 40s. And then because of this resistance, it should pull back. But once that's been alleviated, the next run up is going to be from like 46, 47 to 48 or 49. And then there should be a little bit more serious pullback, as a lot of people do unload positions. However, most people that bought back in 2011 have already gotten out of their position. It's not like they're still waiting to break even when they bought at 40 or 41 or 42, something like that, and then they're going to sell now thinking that, I broke even finally. No, they're going to, even those people, most of them are going to hang on because they realize that there's a slingshot move coming after these prices. Now, I believe that I was the first person to recognize, everybody was talking about the cup and handle that was developing on gold in this time frame, myself included. I was focused on it. I was pointing out the gold cup and handle, there was a triple top, an inverse head and shoulders pattern, and I said when it broke through it, it was going to make a slingshot move. That is exactly what happened. But then I took a look at silver, and there is this giant cup and handle going back 45 years to January of 1980. When it breaks this, look out below, or should I say, look out above, because this is going to skyrocket. It's going ballistic, astronomical. And then the Happy Hawaiian says, how much silver exists in the ground compared to gold? Roughly 19-1. That's in the Earth's crust. So how much silver do they mine each year compared to gold? About 7 ounces of silver for each ounce of gold. How much is available in stockpiles? More like 3 ounces of silver for every 1 ounce of gold. So what's the price of gold compared to silver? Right now, well, when this was posted in April 17th, that's how long I've had this tab open on this browser, it was 102-1, the gold-silver ratio. 102 ounces of silver equaled the value of 1 ounce of gold. Now it's at about 94. Okay, cool. Well, if this reverts to that, the actual above ground stockpile supplies, that would either require gold to fall. Silver could stay where it is, and gold could fall to $500. That pretty much at this point is an impossibility. They're going to keep on creating currency. So what's the alternative? If gold stands still, silver could go to about 1,000. If it was to go to, I'm not saying that it's going to this ratio, but that's what it would require to get to that 3-1. About $1,000 an ounce silver. So I don't think it's going there, but his final conclusion here is, okay, cool. And mine is, which one are you going to buy?
The gold-silver ratio is one of the most powerful wealth signals in macroeconomic history, and it's screaming out an opportunity right now. Gold doesn't need to fall for this ratio to normalize. If gold holds steady while silver reverts even partially, we could be looking at a silver price of $100 to $250. This isn't fantasy. It's math backed by 45 years of price history and 6 straight years of structural deficit. The professionals are quietly positioning. David Bateman just bought 12.69 million ounces. Eric Sprott is forecasting silver multiples. Meanwhile, the public is asleep. So here's Mike's final question. Which one will you be? The person with a chair when the music stops, or the one still watching the headlines? Share your thoughts on Mike Maloney's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.